Hey, welcome everyone. I know we did a video update on the Person Algo Optimizer and some of the trade signals that were generated. Um, I apologize for the sound quality. We are in Europe right at this point in time, and a lot of you know we have our annual financial cruise, which we're going to be going over a lot of wonderful things about what indicators are kind of working on this time together with our private traders. But for those who have been using the Algo Optimizer, we also put out a really strong indication of what we can use this for to help us to predict where extensions of market trends may go for specific time periods. This is the Aapl, which we did in the last video update, a 60-minute. It generated a long position, as you can see the entry right here, a long position on Friday, and a lot of folks are looking at Aapl, which has been in a little tight range here, this little box, and or sideways trading action. And the funny thing is that the profit target was hit. So as you can see, two things though. You'll notice that it says it went long 52 shares. So 52 shares of Aapl. And as you notice here, it got out of only 47 of them. So what does that mean? Well, it gets out. We have a function with that optimizer which has a position adjustment factor which gets out of so many trades and then trails the stop. Now, I don't think that, of course, if this thing continues to rock and roll to the upside, it's going to make a huge difference in shares of return on equity, but it also will have stopped out on the balance. But it does allow us to trail a little bit of our position. So that's kind of the neat thing, and it squeezes a little bit more out of profits while capturing the best general amount per move. And generally speaking, the optimizer calculates and has, based on past performance, what the normal tendency or rate of return is for a market. So, like for example, if you take a look with me real quick, what I meant by that statement is simply this. Here's a buy signal, and it takes the profit on the majority of the signal. So it got in 53 contracts here, and it got out of 48, and it allowed the rest to ride. Well, look what happened. I mean, if it continued up, you'd be saying, well, I wish I didn't get out of any. You wish you had some on, right? But if it does exactly this, goes down, instead of having everything on and losing more profits, or possibly even worse, getting stopped out, right? I mean, you'd probably trail a stop to break even, right? And or maybe something worse happened. You thought you were going to trail a stop and lock in a profit, and it gaps lower on you. As you can see, this is that gap right there. Again, this is designed to say what is the average typical length of the move, and do we take profits, and is it best to take profits? This thing is already calibrated. It's best to take profits on that much of the position and let the rest ride, or eventually if it does break out. Here's another situation where, man, it just got out on a trailing stop function. So it gets out of adjusting by position to manufacture the best results and profitability, as well as it also has a function of trailing stop. But I thought, since we did put out the last signal on Aapl, I thought it would be important to share with you that it did scale out of the balance, or the majority of position, and it's going to have a trailing stop feature on the balance. We'll keep you updated as time permits with other positions that it generates, as well as other trades. In another market, the spiders. Now, this is again another 60-minute strategy. The 60-minute strategy, we take longs and shorts on this strategy. As you can see, it does the same kind of function. It trails out, as you can see. Look at the difference of the amount of positions it gets in. It gets out of the bulk, and who knows, maybe if the market crashes, you want to have more short positions on, but it takes the balance of position out and allows you to still trail. Here it gets out of a position, as I posted in the prior video, and I alerted everyone, it is long right now. So the system is now long. The spiders has been long, so going into the weekend, we're still in that long position. In addition, it has a profit target. Now, I don't know if it's going to hit that max profit target, but here's the neat thing about this function. We have programmed the Algo 16 version, and we've increased the color coordination, which might be hard to kind of clearly see the coloring, but what we've done is we've color-coded where the trailing stop function would be. We've also color-coded where our original stop level is, the original stop level, and you can see the profit target, which is blue. Wow. I mean, we're going to have to see one whale of a move to get up to the profit target of this extension. I don't think it's going to, I mean, anything can happen, right? But I think what will more than likely happen is it might move up and we'll end up having a stop out on a trailing function. But it's kind of exciting to see it project to move up to 282. It's something worth noting. Not that, past performance is not a guarantee of future results, but when you have a system that more times than not has a decent profit target set and it's engaged in its calculations, like this is the again, red is the short. Here's your trade. That your red indicates the stop out function. Blue indicates the profit target. In this case, obviously, the profit target was close to the entry, but still a nice from entry to risk versus reward. I mean, there's a little space there. There's a lot of space there. It's a huge risk, a nice greater reward than risk parameter on that setup. Same thing here. Here's our entry and here's our risk, and obviously the reward is really targeting a big move. So it's nice to see that, and you can sit there and say, well, what's the odds that this thing's going to hit its profit potential?
Order filled.
It may be less than 60%, but it's something that we can pay attention to, and as well as we get closer to that profit target, we can kind of identify perhaps maybe we should be paying closer attention to the trailing stop function that would kick in. So anyway, as it is right now, we are long. The system is now long the spider on Monday, June 4th. It's been long since Friday, the 1st of June. Let's take a look at my signature product, which is the VXX, and we'll look at those signals. When I say signature product, this is the one that we've really been helping individual investors understand the dynamics behind this, especially with our Algo Optimizer. And again, this has been short the market, so it's nice to see that this is short, these spiders are long. So I mean, I would hate to have this short and be short the spiders. It's counterintuitive unless it's a hedge, and in that case, I'd like the reverse to be true. I'd rather be in this on my initial position and hedge somewhere else, because this tends to have some dynamic moves, and not only that, but it's got a great history with our algo settings. So when I say I'm more reliant on this, it's probably because there's a couple functions about the VIX or the VXX exchange traded note that are more dynamic for investors. When we take a look at our performance, and I'll bring this into focus for you, which popped up on the other monitor, my bad. So let's bring this into focus. When we look at our performance over time, that equity curve, it's just off the charts. And I know we shared this many times, but when you take a look at the annual return, it's just, I mean, this is based on the settings on this particular model are based on $100,000. The problem with one of the issues that you got to understand about reading the TradeStation strategy performance report is that this assumes that you're rolling your cash over instead of the base account being $100,000 on signals. But can you imagine this
order filled
in its state now is doing a phenomenal job this year. I mean, year to date, signals provided up over 107,000 on a 100,000 base account. In the last 2 years, 17 and 16, it only had a 42% return or 43% return on equity. But still, every year it's had a phenomenal track record, and that's why we like. And this year we've been sharing these signals with you and consistently. And I just wanted to point out to you again, this signal did go short. We posted that on a video. It's still short the market, and we have a nice open trade profit, which you can be seen right here. This is the purple line is the open trade equity, and the green graph shows closed end profit. So already it's up 3% per $100,000 account, which is phenomenal if you consider that some people can't make 3% in a year. This is up 3%. So it does the same thing. It will trail it out of if it was in a long, like in this situation, it trails a stop out to lock in. And as you can see, it gets out near a profit target. So while this is short, spies are long, and while those two are in sync, we want to be aware and cognizant that we can see we don't want to be guessing and saying, let's sell the S&Ps. Why bother? I mean, the system's long. So that's the dynamics of this, is that, by the way, we can kind of assume where the market would need to go if the S&P's at that 282. By the way, the max profit on this would be somewhere just south of 31 on the VXX. As you can see, currently we're at 34.52. So if the spiders run, this thing has got a lot of leg room to the downside. Thanks for watching. I hope you found this information useful.